All right, thank you so much, Joel. Thank you, everybody, for joining us and all our wonderful panelists. Why am I here? Because I know nothing about incorporation. So as the moderator, I hopped on not as an expert on this, but as quite the opposite. So I'm so excited to bring these experts in to talk about why you should or should not incorporate. I'm going to start off by saying that this is not official legal advice. We all allegedly said it's not official accounting advice or legal advice. We can disclaimer that in the credits. So yeah, I think that covers us, right? Good. Thank you. So I'm coming at you with two hats. I guess I'm vice president of Folk Music Ontario, and I'm also the coordinator of outreach at the Canadian Federation of Musicians. And this topic seemed like a great one to touch on, because at Canadian Federation of Musicians, we negotiate agreements on behalf of musicians for fair wages, fair agreements, but we also do pension program for musicians, and insurance and work visas and other things to make sustainable careers happen for people that work in the world of music. And there were some questions that would come up in my day-to-day jobs. People that would be touring the US that were being asked to get certain types of liability insurance that required incorporation. People that wanted to know how to sign on to the sound recording labor agreement, or be able to negotiate pension payments and stuff like that required incorporation. Also grants, musicians applying for grants, or young music businesses applying for grants that needed to be incorporated. So this stuff kind of kept on coming across my desk. I was interested. I know nothing about it, and I figured it would be best to ask the experts here. So we have a wonderful panel of folks. We have Sandra Gold from Sandra Gold CPA. We have Chris Guerra from Macmillan LLP, Gina Lepin from Edwards Creative Law, and Byron Pascoe from Edwards Creative Law. We've put together a huge list of topics and questions, and it's ask is that in general, if you can hold until we're going to do like the last 15 minutes for questions. If something's like burning you up and you really need to ask it, pop it into the chat, and Joel can interrupt us. But we have a ton of stuff to get through. And we're going to do it in a bit of a timeline. So starting at, we're kind of saying the what, where, why, when, and how, but not in that order. So we're going to look at it from somebody who's starting to think about whether or not they should be incorporating, then take you through all the steps. So should I or should I not? And then the process of incorporating. Great, now you're here. Now what do you do? So stuff about your responsibilities, et cetera, et cetera. And then we'll just get crazier from there. So let's start with the first question. The first question that we have is, should I incorporate? And I'm going to kick this over to start off to Sandra. And we're going to, I guess, if you are a musician or a starting out music business, small music business, should you incorporate or should you stay a sole proprietor or a partnership?
Yeah, so I think it's important, and first, thank you for having me. I think it's important to define your business structure right off the top. So where are we? Are we a sole proprietor? Are we a partnership? Or should we be a corporation? So just to make sure that everyone's on the same page with that, a sole proprietor is a business statement. So you personally run your business, you have your income and expenses, it all gets picked up on your personal tax return. A partnership can be between multiple people. So if everyone's individuals as a partnership, you pick up your share of the income and expenses on your personal tax return. You can have corporations in a partnership, that's different. or a corporation. And a corporation is a separate legal entity. It files its own tax return. It can be sued. It can sue others, has its own business number. And when it files its own tax, it's separate than your personal tax filing. So when you're considering, should I incorporate, from a tax perspective, not from a legal perspective, I'll leave that to the lawyers. From a tax perspective, there's a big tax deferral you can have. So a corporation pays a lower tax rate than an individual once you hit a certain threshold. So a CCPC, a Canadian controlled private corporation, which as a Canadian is what you would own, pays, so the first 500,000 of profit, income less all your expenses, right now is 12.2% is the tax rate. Whereas personally, once you pass about 45,000, your rates go up. Once you earn more than 220,000 of profit, income less expenses, personally, the next dollar and up is taxed at 53.5%. So there's a really big difference in the tax rate. So if you have more money after taxes, after all your expenses, then you don't need it personally. So you don't need it for your home, for pets, kids, personal vacation, medical, personal insurance, personal properties, and you could have left that in the company. That's your savings. If you could have left the money in the company, let it get taxed at that low rate, have more money after taxes to reinvest in your business, that's where you see the benefit of incorporating. So that tax deferral is a savings, as well as there is some tax planning that you can do. So you can take money out of the company over multiple years, as opposed to hitting your one tax return at one time, bringing you into a higher tax bracket.
Thank you. I'm going to send it over to Chris. Chris, can you give us some legal reasons why somebody might consider incorporating?
Sure. So in terms of liability and some other reasons, so let's start again with sole proprietor. So again, I'm a person running my own business. So I'm liable, right? I sign contracts, I'm personally liable. In terms of liability, that's the big thing on a corporation. So we'll chat a little bit about that. So proprietor, once I die, my business is done. There's no continuity of business. So I've got this great business humming along. I die, it's over. There's a deemed disposition by me. Upon my death, the business is over. There's going to be taxes, and at that point, if I thought, I want my spouse to take this over, or one of my kids, it's kind of late. So continued existence is an issue with proprietors and partnerships. Corporation has an indefinite duration. So in terms of sole proprietors, again, personal liability, no continuity of business. So it's a flexible structure, obviously, right? There's not a lot of money up front. You're your own boss. So there's lots of positives to sole proprietors. But in terms of negatives, that's two of the negatives. A partnership is, and I apologize because I have to go back to, I have this definition in my head for the last 25 years. Two or more parties acting in concert with a view to a profit. That's all a partnership is. You don't get a partnership agreement. Just working with somebody, you think it's some kind of casual relationship. If you're working in concert with a view to a profit, it's a partnership. Partnerships are a little bit troublesome from a liability perspective, because as a partner, you're responsible for the liabilities of your other partner. So if you're running a business together and I'm running a partnership, say with Byron, he runs out, does something that I don't agree with, and there's liability, I'm still on basically for half of that liability. So it's joint several liability. The partners are liable for each other, kind of as a starting point. Partnerships can get complicated, right, with partnership agreements. So you have the Partnership Act. If you don't have an agreement, the Partnership Act applies, Ontario Partnership Act, and it'll have certain default rules. In terms of a partnership, most people enter into a partnership agreement to talk about things about responsibilities, who's doing what, talking about financing, how much money are we going to put into this? Probably more importantly, how we split the pie, right? So partnerships agreements are typically in place in the form of partnership. The risk, the good thing about partnerships is they're not as rigid as a corporation in terms of reporting and some of the rules. But the partnerships are like sole proprietor. There's no indefinite duration of the partnership, and there's liability issues. So now we get to why would we incorporate? Well, incorporation has some benefits, of course. So you limit your liability. As Sandra said, the corporation is a separate legal entity. It's distinct from the shareholders. You'll enter into contracts. The corporation will enter into its own contracts. And under corporate law, it's the corporation that's liable for those contracts. Typically, liability does not go up the chain to shareholders. There's exceptional cases about piercing the corporate veil, but the starting point is the corporation that's its own separate legal entity, liable for its own actions. Corporations' benefits include indefinite existence, right? So if one of the key people dies, at least the business continues. Corporations allow you, if you have multiple shareholders, as a source of funding, equity, people issuing shares or buying shares in the company. Partnerships and sole proprietors are typically by loan. If you need money, you go and get a loan. Whereas corporations, you can get some infusion of capital by way of people buying shares. In terms of, so those are kind of the big things about corporations. Sandra mentioned the deferral from a finance perspective, but from a legal perspective, it's limiting the liability of individuals. It's getting some money as people contribute or buy shares in the company, continued existence. So those are kind of and again, I guess in some cases you have to be a corporation for certain grants, so it may be required in your industry to actually be a corporation. So those are kind of the things, the advantages of a corporation. I think the bigger ones. I don't think maybe Byron and Gina have a few things that they want to add that I've missed, but I think those are kind of the bigger ones for the moment.
Yeah, Byron, I was going to get you to chime in just about if you have considerations about maybe when, more consideration to consider incorporating.
Sure. I think the big question people have from Sandra's point about 200,000, making 200,000 is how you actually make $200,000 in your music, but that's a whole other panel. Yeah, I'm happy to be here. I'm an entertainment lawyer with Edwards Creative Law, and my colleague Gina is here as well. Among other hats, she's our corporate clerk for corporate matters, including setting up incorporations. Yeah, so one way to kind of consider this question is, should I incorporate or should we incorporate? And within music, there's kind of two different types of businesses. There's the individual who is a musician, and then there's also music management companies, festivals, labels, publishing companies. So there's a variety of music businesses, and kind of the music blog that I write, the title of it used to be, or I guess sort of still is, being a musician is a business, and it really is. But the first question relating to business structures generally is, who is actually involved, because that definitely plays a key role. And there's definitely some advantages for a corporation when there's multiple people involved, or at least some additional reasons to incorporate if there's multiple people involved, or if it's a business that really does need to survive after you die. Not to get too morbid, but relating to Chris's comment, if you're a music management company or a label, even though it's important that you're alive, that business definitely needs to survive your death. Whereas for a musician, it's not. It's a little bit of a different scenario. So just again, the people who are involved and the type of work you do within music definitely plays a role here. And I don't think I answered your question, but hopefully that just provided some additional context for the conversation as we begin.
Absolutely. So let's go a little bit now in the process and get to the how. How does one incorporate? Byron, would you like to?
Sure. I guess the initial question that often gets asked is, do I need a law firm or an accountant to incorporate me, or can I just do it myself? Before I was a lawyer, I was a TV producer, and my first corporation I did by myself. And it all worked out fine. Maybe not the business entirely, but the incorporation process went fine. You can do it by yourself. It is faster to do, or it's less expensive. You're not paying a lawyer to help. But there are a lot of reasons why you might want to use a law firm or a lawyer to help you with the process. And we're not here to say that some of these online programs that can incorporate you are bad. But what we can say is that there are advantages of having a law firm involved to incorporate you, namely to help you, to walk you through prepare documentation that you're just not going to get from those websites. And we're going to get into some of the details of some of that documentation, but the point of a lawyer in that process and a corporate clerk is to really walk you through it based on our experience and prepare documents that you just don't get, if you do it on your own. So that's kind of the starting question is really, comparing, can I do this by myself? For sure. Should I do this by myself? Maybe not.
And Chris, did you want to speak a little bit to if the process is different if you have shareholders or if you're coming into incorporating with multiple people?
Sure. So Byron, as he was speaking, I was thinking of another point, another advantage of corporations, and your question is basically right on par. So in terms of one of the advantages of a corporation, and again, if you're kind of saying, I don't want to talk to an advisor, I just want to incorporate, you're not going to think of some of these broader questions that we deal with on a daily basis. But it's a way of splitting income, right? It's a way of splitting wealth, right? So if I'm starting a corporation from day one, there's nothing in it. Maybe I give my kids some of the shares. Maybe I give my spouse some of the shares. Issue for nominal value. I subscribe for nominal value. And that way, if the thing goes up from day one, we've got the various shares growing as the value of the business grows. And depending if it's a qualified small business corporation, and Sandra will talk maybe a little bit about this later, but there's certainly tax advantages if you ever sell it down the road. But in terms of, if there's multiple shareholders involved, then we have to consider shareholder agreements. So this is an area where shareholder agreements are agreements amongst the shareholders that kind of deal with, I think, three major areas. One is management, decides who's going to do what, in terms of, are we going to, decide a laundry list of extraordinary events that require all of our approval. So these are kind of things. Management is one of the kind of silos in a shareholders agreement that people talk about. Who does what requires everyone's consent, what requires 3/4 of the shareholders' consent. The second silo is finance. And sometimes that silo is not very detailed, but in some cases, it'll talk about what the parties are going to contribute in terms of cash. If we need money, do we loan money in? Do we subscribe for more shares? To be frank, most small businesses, they're silent. They just say, well, we'll just, we'll deal with it when we get there. There's not a lot in terms of the finance part in a shareholders agreement for most small businesses. And then the third thing is my experience. The third thing is exit. So we have 3 or 4 shareholders. We love each other. We're in a band. We're making money. This is great. We're all together in this boat, together in this corporation. We're making money. But then eventually, there's a split. What happens? That's a big point in shareholder agreements. So it's kind of a little bit industry specific, but what happens if one of the person dies? What if one of the person decides, I don't want to, in this case, be in the group anymore, I want to go do something else. Well, the other people are saying, well, we still got this great business going on. We don't want you sharing in our efforts going forward. So we're going to buy out your shares. So again, governance, who does what, or management, finance, and exit. Exit can be a huge issue, not only from a finance perspective, but just from a legal drafting perspective. But before I pass on to my fellow panelists, one thing I've learned over the years is, a lot of times people come in and they're excited and have great ideas, and they just say, okay, we want to go ahead and we want the shareholders agreement. And sometimes the best advice might be, okay, I understand that, and you don't want to be in a situation where there's a fight and you have no agreement in place to deal with dividing up the company. But maybe spend some time and make some money first and focus on the business a little bit, because I found sometimes there's a lot of time and effort, and then the business, if it's not successful, you've spent quite a bit of money. So that's kind of one of my practical tips, is to think about, do you really need that shareholders agreement up front? It could come back to bite you, of course. In 6 months, you might say, hey, we just made a ton of money and now we're arguing we don't have a shareholders agreement. But often people spend a lot of money up front, time and effort, and then the business, sometimes I think just let the business run and actually get some money going first. I don't know if any of the other panelists have anything to add on shareholder agreements.
Maybe that's my fault. I always encourage my clients to get a shareholders agreement right away.
No, it's
I
not
guess I've seen, situations where someone wants out and it can get messy. So I incorporate clients as well, only if there's one shareholder. If there's more than one shareholder, I send to a lawyer, because it does get more complicated. And to have things laid out, if someone wants to leave or something happens, even if there's no value to the company, there is a value, and there's, even a big value in a name that's been put on the balance sheet, but it just gives them an exit strategy or something. If everyone knows how this is going to work, it's just easier and calmer and less complicated. But I agree, you have to be able to fund it. And if there isn't anything going on yet, give it a bit of time, but don't forget about it.
Don't forget about it. No.
Gina, what should people consider when naming their corporation? Like between using a number or their own name or a made up name, how would people make that decision?
Sure. So, sometimes it comes down to cost. There is a fee associated with searching, whether it's Ontario or federal databases for company names. So if you are choosing a name, whether it's your own personal name with some kind of legal element to it, or your name with a descriptor, you will have to search that and see if anyone else is using a name that's confusingly similar. If you're choosing to incorporate in Ontario, they will only search Ontario for businesses, includes registered sole proprietorships, registered partnerships, corporations who are using a different name other than their incorporated name can register in Ontario with a particular business name. So you're looking in that jurisdiction for anything that might be considered confusing, and you may want to avoid using a particular name if someone else is already using something like that. If you're incorporating federally, they do search across the country for names that are similar. And it's always important, if you are using your own name, to include something distinctive. It makes it stand out, not only professionally speaking, but also to the various government bodies when you're submitting your name for approval. So that's also something to consider. It doesn't have to be your personal name. You can come up with something else distinctive, something that's meaningful to you, either in your professional life or personal life. But it's just important to know that if there are names out there that are similar, that can cause you. Just a note for those people who might have a sole proprietorship name or a partnership name registered within Ontario, if you then want to incorporate and use the same name, there usually is a consent involved or a commitment to deregister the name at the provincial level to use then for the incorporation. You can also receive consents from competing businesses who have similar names, but it's often very difficult to do that because no one wants to share, obviously, recognition in their name. So just something to consider to be distinctive when you're picking.
And you brought up the incorporating federally versus provincially. Is the name the big consideration when you're trying to decide which one to do, or are there other considerations?
No, there are a number of considerations. Kind of one big one that may be relevant is cost. Just from a fee perspective, government fees, Ontario does charge a bit of a higher fee, $300 versus $200 at the federal level. So provincially, depending on how you do your incorporation, they've recently brought in online services that would allow you to do it. It's a do-it-yourself online business registry, which might bring down your costs as opposed to going through a lawyer. Lawyers generally use third-party service providers to file at the Ontario level. So there are some fees associated with that. Federal, they've had an online system for a while now that's quite efficient. And going through the online system has no third-party fees. We, as our firm, we use that system and therefore don't have that fee to pass along to our clients. There are a number of other considerations as well. I don't know if anyone else wants to address this or if I should carry this torch, but
I have something to add here. I have this conversation of when should I incorporate regularly with my clients. I had it twice yesterday. It's definitely a popular. People come in saying, "Oh, I would like to make my business official and incorporate, and so I can have a name." That reason alone is not necessary to incorporate. You can get something called a master business license, which you apply for, and you can own that name. You can operate through that name. You can have a bank account in that name, invoice in that name. And so I think that's what Gina's talking about, where you'd have to move ownership of that name into the company if you did choose to incorporate. But for anyone who's thinking, oh, I just want to incorporate so I can have a name, there is another option that's really not expensive.
The option that actually provides you rights to the name is by trademark, though. And you don't get trademark rights in any of these things. You get trademark rights by using the name and by registering it with the government. And it's a national system. So you would register in Canada, you register in the United States separately. And that's really kind of the best way to protect the name. There's a general misconception that, if you register a name, that you get the exact same rights as a trademark, and that's just not accurate. But definitely using a name in public is a way to generate what's called common law trademark rights. It's not as strong as the national protection that you get when you register the name in association with certain products and services. So if you have a name if you're an individual and you have a stage name, you'll be using your stage name because you're using it when you perform, when you put music out in the world. But if someone else is using the same name, which happens quite a lot, there's over 60,000 songs that are uploaded a day on Spotify. So think about how many people out there in the world are in music and who are using, a name to represent their music. Many names are used multiple times, and the best way to try to stop somebody from using the same name as you is to have a trademark registration in the name with respect to music services in the relevant jurisdictions. But I mean, that as well. And I'm definitely not a trademark lawyer, but that's it's definitely I totally agree with the other comments of the panelists. You don't need to incorporate to use a business name. You're supposed to register a name if you're running a business. That's what you're supposed to do. But definitely you don't need to incorporate in order to have a business name. I'll keep it at that.
I'm wondering if we can clarify a couple words. Is there a difference? Are these all the same people? Shareholders, officers, directors. Are these different people, or are these all the same people? Or are there other people that I'm leaving out?
Well, in terms of, there's certainly different roles. They could all be the same person, but there's certainly different roles, right? So directors, they're kind of the operating, they're responsible for the overall supervision and management of the corporation, right? So they have fiduciary duties to act in interest of the corporation, and the directors, that's the highest level, right? It's the board of directors. They have potential liabilities, though. We've talked about directors. They have liabilities if the corporation doesn't pay its taxes, it doesn't pay its payroll deductions. There's a number of sources of potential liability for a director. So if you're ever asked to just go on somebody's company as a director, it's not just like a favor. Oh, sure, I'll go on your company as a director. If somebody says, you've got great ideas, I want you on my board. Well, that's a nice compliment, but you've got to actually think through this a little bit before you jump on a board of directors, because there is some personal liability. But ultimately, that's the role of the directors, to oversee kind of the overall management, to oversee the corporation, strategic direction of the corporation. And there's certain explicit duties in the governing act and standards that they have to follow. In terms of officers, that's kind of your senior management folks. They may or may not be employees, right? You may have a secretary of the corporation that doesn't get paid. You might have the CEO who gets paid or doesn't. So officers per se are not always employees, But the officers are kind of the leaders in terms of day-to-day operations, and they will have functions set out in the bylaws typically, or in resolutions. It'll talk about what their responsibilities are. And then if they have an employment agreement, it'll be set out in their employment agreement as well. So officers also have some potential liability exposure, but not quite as broad as directors. And then finally, employees, they're the folks doing all the work. They're the everyday folks doing the work. And again, in terms of smaller businesses, sometimes an employee might be a related party, somebody who does your IT, family friend, somebody. But if they're an employee, if there's any type of creative involved, you want them to have employee agreements, right? You want to make sure, because typically, if you have an employment agreement, work that's done by an employee is for the corporation. So that's why it's kind of advantageous sometimes to make sure if you have people working for you, and it's better to have employees from the perspective of trying to protect your intellectual property of the corporation. They could all be the same people though, right? Quite often small businesses, your directors are also your shareholders. And if it's small, they're probably the employees as well, but they have different roles, different liabilities.
Thank
Can I add
you.
on to that briefly? Totally agree. Building off of that, every corporation has to have every for-profit corporation has to have at least one shareholder. The shareholders elect the directors appoint the officers. Oftentimes, if you're a singer-songwriter or a music manager who has a music management company, as Chris said, it's you for everything. You are the shareholder, you are the director, you are the officer. It doesn't really make a difference day to day if, there has to be a president and a secretary, but really, the only time that really comes up is when you're, signing the back of a resolution. It doesn't make a difference in the grand scheme of things or the day-to-day operations too much, especially if it's just you operating your business. And these are, but as the business grows, further to Chris's comments, like there are other people who will play these roles, and it is very important to make sure, if you're a singer-songwriter and you have people who want to, join the corporation for a variety of reasons, and you want to include them, and we'll get into some of the stuff, but you do want to make sure that you have control of the corporation, and you don't want to just give out director roles to kind of anybody. You don't want to give shares away to just anybody. A lot of the underlying purposes of some of this stuff, or just the underlying reasons to make some decisions relating to things we're talking about, is about control of the company, control of your business. And, when there's one person involved, it's very easy because it's you for everything. You're this, you're this, you're this, you're this, you do everything. But as you bring in more people and people ask for certain types, those roles become more important as there are other people involved in the business with you.
Great, thank you. I'm going to move on to like the next scenario, which is that you've incorporated, you've gone through and emerged a beautiful corporate butterfly. Now what happens? How do you? I
refer to it sometimes as like your child, your incorporation. The date of incorporation is the birthday. It's a special day. It should be on your calendar. It's a reason for cake.
Sandra, can you take us through what the responsibilities are for you at the point of like filing taxes in terms of like your accountability?
Absolutely. I say the same thing. I say you've birthed the corporation because it is another taxpayer. Once you have birthed your corporation, you have some responsibilities and some organization that has to happen immediately. And then you also have annual filings that need to take place. So right away, I say get an accountant in your life, industry specific. You need to register for HST most likely. So let's just say yes on that. Register for HST, so get your business number. But even before you can do that, you need to pick your year end. So unlike an individual where our year is January to December, you file by April every year or by June. A corporation can have a year end any month of the year. So you can have an August year end, you can have a December year end if you choose, an April year end. So depending when you incorporate, that's a discussion of what makes the most sense in your business cycle. When do you want to be organizing your stuff and having your meeting with your accountant, or when your cash flow is strong, if you haven't saved for taxes. Or if it doesn't make a difference, you can go all the way up to a year, and I think it's 5 days till you have to file your first year end, your first corporate tax return. So your corporation will be responsible for filing a corporate tax return and an HST return if it's registered. The HST can be monthly, quarterly, or annually. I always say annually at first, unless you need, and this is kind of another topic, unless you need your HST spent back faster. I'll just say that for now. But every year your corporation has to file its corporate tax return. Typically, financial statements are prepared so that you as a manager can look at your business and see how things are going, and must file a tax return, an HST return. Your taxes and your HST are due typically with a small business 3 months after your year end, whenever that may be. Your corporate tax return needs to be filed at least 6 months after, but because the taxes are due 3 months after, for my clients, I just say pretend it's 3 months after. And HST, it's 3 months after, and the taxes need to be paid. So every year your corporation files a tax return. So even if you have a December year end, it's a different filing deadline than you as an individual. Does that answer? Yeah, awesome. I think that, let me add in one thing. Once you're operating through a corporation as opposed to as an individual or a partnership, there's certain ways to take money out of your company. And if you are more than a 40% owner, you can't invoice your company like you were invoicing others when you were a sole proprietor. The two ways to consistently take money outside of the company repaying you for a loan would be dividends and payroll. So you have to figure out which one works for you, which one makes the most sense. Payroll it's a constant thing, and you have to be remitting your taxes and your CPP to the government. So there's things to consider, and that's a discussion and something to establish. Another thing that you need to organize and figure out is record keeping, bookkeeping. Once you have your articles of incorporation, you can open up your bank accounts, because the company, it's its own separate legal entity. It's going to have its own bank account separate than yours personally. Maybe it has a credit card in its name. And you need to organize who's paying for what. How do I organize my receipts? The bookkeeping for a corporation is different than you as an individual if you're going from a sole proprietor to a corporation, because you have a balance sheet now you have to care for, and assets and liabilities that get recorded and reported, as opposed to just income and expenses, which a sole proprietor is that's what that would look like for your personal return.
Thank you. And what is a minute book? I've heard that come up. And why do we need to have one?
So I'll address this one. Minute book is basically reference to what traditionally was a physical copy of all of the corporate records. Corporate records in a way of documenting all the actions of the corporation, the directors, the shareholders, along with the question about annually what needs to be done for an organization, what are their obligations, in addition to obviously filing their taxes. There is a corporate record side to this, and the timing of it is usually in coordination with their financial year. Once a year's worth of financial records are completed by their accountant, the directors and the shareholders of the organization are meant to have either an annual general meeting or have annual resolutions drafted, basically confirming the activities of the corporation for the previous year, confirming that the financials have been seen and approved, and then setting out certain pieces of the structure of the corporation for the upcoming year, confirming that the directors are still the directors, the officers are still the officers. And that's something we at our firm offer kind of our corporate clients, those that we've incorporated. We get back in touch with them on a yearly basis, make sure that their information is current, offer to draft their annual resolutions for them, because in a lot of cases, we do deal with a lot of sole directors, sole shareholder type corporations. So it makes no sense to actually hold an annual general meeting for one person. And so annual resolutions are the norm for us. And in addition to making sure the corporate records in the minute book Like I said, traditionally they've been physical books with copies of the documents, the resolutions and whatnot signed by the directors and shareholders. A lot of organizations are moving to digital minute books now to just keep an electronic record rather than a physical book on the shelf. And so in addition to keeping up those types of records, there are also obligations to reporting to the various government bodies. In Ontario, up until recently, they were filed along with tax information, but it's now turned to the business owners to be responsible for filing an annual informational return with the Ministry of Government Services to confirm the important details of the corporation, such as registered office address, directors. And then also at the federal level with Corporations Canada, there's also the need for filing an annual information, again, various details of the corporation. In Ontario, if you use their new online business registry, it is free if you, as the business owner, want to file those yourself. Corporations Canada does have an annual $12 filing fee for that, but those are some annual obligations, and there is the effect of if you don't file, especially if you are a serial non-filer, the various government bodies can dissolve your corporation.
Which can be very annoying.
Mhm.
And there's a whole
Yes, we've had a
process.
few that have dissolved and reborn and dissolved and reborn.
Yeah, so, check your email from Corporations Canada. If they
Yeah.
say you spend $12 or whatever to confirm your director's an address, etc., respond. Do not wait 2 years, please.
Not it. Okay, we are almost at the point that we're going to open up for Q&A. I realize that I a huge faux pas, and I did not introduce each of you individually in terms of, or let you introduce yourselves or do the thing that I was supposed to do as a moderator. So just before we open up to questions, can I just send it around the circle and have everyone just give a brief description about how, like the work you do and how you interact with clients in the music industry. And I will start with Chris.
Sure. So I'm Chris Guerra. I'm with McMillan in Toronto. I'm in our business law group. So I do, business law, corporations, buying and selling of businesses, licensing agreements, distribution agreements, a wide variety of commercial agreements, a lot of governance, shareholder agreements, partnership agreements, things like that. I don't particularly have a strength in the music industry.
I think you're doing great, Chris. You have many strengths. Byron, I'm going to throw that to you.
Sure. I'm Pasco. I'm an entertainment lawyer with Edwards Creative Law, Canada's entertainment law boutique. I mostly do music, but not only. And within music, I work with artists, producers, managers, festivals, music companies. But it's predominantly performers who write their own music, who tour, who enter into label agreements, publishing, have managers or producers. And as an entertainment lawyer, I'm really a commercial lawyer with a specialty in entertainment. Assist with these types of things as well. Incorporations is probably the most common thing that we do, just because it's just extremely common, but it's definitely not the only thing within music. But yeah, in terms of Folk Music Ontario, I've spoken a few times at the conference in person and online, and look forward to attending again in person whenever that is.
Thank you. I'm going to send it over to Gina.
So I work with Byron. I'm the corporate creative law. So I deal with the kind of technical, practical details of the incorporation. I relay with the client, the information needs that we have of what actually needs to be set up in order to incorporate, just the detail-oriented aspect of securing their names, addresses. I run the name searches and kind of secure the name if something comes up as being confusing, or work with them to find something a bit more distinctive. I file all of our documentation with the various government agencies to get the incorporations completed. As Byron said, most of our corporate work with related to our entertainment clients is in corporations, but we also do amalgamations, dissolutions, articles of amendment. We kind of take it to whatever life our clients need with regards to their incorporation and how they change over the years. And but I am the point person for the filings and for making sure that the information gathered for the filings are correct. I'm responsible for the annual corporate maintenance of our clients. So every year I'm in touch with our clients, reminding them they need to update their information and offering to draft their resolutions accordingly. So I'm the record keeper.
Great. Thank you, Gina. And Sandra.
My name is Sandra Gold, and I have my own accounting practice here in Toronto, and I specialize in the cultural industry. So music, TV, film, nightclubs, comedy clubs, anyone in front of or behind the camera, all the performing arts, anyone on stage. I also work very closely with a US accountant, so I can take care of cross-boarding needs, as well as business management, payroll, bookkeeping. We file personal and corporate tax returns, and that's basically what I do. And I do want to say, I think it's really important for anyone looking for an accountant or a lawyer, that's somebody who has some experience in the business. From an accounting perspective, I'm definitely in support of someone who knows the industry, because there's a lot of different things that come up. Someone who has dealt with contracts, for example, from a legal perspective, is who you go to for contracts. From an accounting perspective, it's just that experience allows me to recognize things that need to be recognized. And then I don't write grants, but I also support grants. So if you needed reporting and that type of thing, that's the type of work that I do.
Great, thank you. We have so many questions to get to, so let's open that up. Joel, do you want me to go through the questions and ask them? Do people pop in, or do you want to do that?
I can ask them. I'm looking here in the chat. We've also got some questions here in the Q&A. I will answer this, I'm not going to answer anything. I don't know it. I will ask the questions. My apologies. So the first question: can you note, is it inadvisable or advisable to trademark your own personal name?
I'll just jump in to say that, as I mentioned earlier, none of us are trademark lawyers. Generally speaking, it's more common when you're using a stage name. That's not your own real name. But happy to introduce the person asking the question to some trademark lawyers who have experience in music, who can speak about the process and cost and the value in your circumstances. The general takeaway for the group is that the more you use the name, the better. And if you're deciding about a name for your business, whether it's a service business or for your career as a performer, you want to do a lot of searching before, soul searching too, but searching online to make sure that there isn't someone else using the particular name. Another kind of, again, not trademark lawyer, but it's not just about it sounding, not just about it looking the same, it's also how it sounds. So just because the name of your stage name is spelled a little differently because there's some special character, also important is how both names sound. That didn't really answer your question about whether your name should be registered for trademark, but happy to introduce you to one or more trademark lawyers who can help to provide some additional information on that question. It's expensive. That's the other thing. Much more expensive than protecting something by copyright. But it's definitely there's definitely a lot of value there. I'll leave it at that.
Great, thanks, Byron. We've got a question here from Abigail Lapel. I have a family member who's planning to dissolve their corporation. What are the advantages or disadvantages of taking over versus starting my own LLC from scratch? I'm currently a registered sole proprietorship, and this would be a single-person corporation.
So I'll handle that quickly, I guess. So the problem of anytime you take buyer, right, that the target company that you're buying has liabilities, potential liabilities, contingent liabilities. It has secrets, possibly. It's got skeletons in the closet, right? So unless there's a real good reason to buy that company, it's got some kind of intellectual property that you want, some kind of asset you want, generally to save, to be honest, not a lot of money in the overall scheme of things. It's not worth taking over somebody's company to save $1,500 to get a new depending ballpark $1,500 to get a new corporation. Cheaper if you do it on your own.
Chris, do you want to speak to LLC?
Sorry. So when LLCs, that's certainly my experience. LLC is a U.S. limited liability company, and it's got certain flow through advantages in the U.S. But in Canada, we have corporations. We don't really incorporate LLCs here. And if somebody's cross border and they think they can use their LLC in Canada, Sandra will know this better than me, but in Canada, it's just treated as a corporation. There's no kind of flow through.
It's a very common misconception. The LLC is just kind of the common word that's thrown around within music generally, because it's an American concept, and like other American concepts, it's just not how we do it here in Canada. If you're incorporating, it's a corporation. Different than an LLC in the United States and like S Corp and all that stuff. It's just a different system, different country, different system. But yeah, and totally agree with everything you said, Chris. I guess a very minor point is that sometimes for a grant, you might need a corporation that's existed for a couple of years. And in that case, it might be useful. However, sometimes in those situations, you have to actually be operating the business for that amount of time. So the fact that a corporation existed for a couple of years or more doesn't actually help you. Which leads to just a very quick point about music grants, and that some of them in past and possibly some in future do require incorporation. Sometimes you're allowed to incorporate if you do get the grant, but definitely a reason to incorporate might include that you're applying for a grant that requires that the applicant be an incorporated company.
Thanks, guys. Kyla Tilly with a question here. I release my and my husband's music under a record label name, multiple bands, sometimes involving bandmates, but always involving one or both of us. I would like to register or incorporate the label, but should I also register my solo act, or can I do all my business as a singer, songwriter, etc., and have everything flow through said label?
I actually wrote an answer in the chat a few minutes ago on that, and I'll just kind of read it out loud because I have something else to add to it. But I wrote, the classic legal answer is it depends. But generally speaking, you're allowed to have one corporation have a variety of activities, including but not limited to the music of you and your husband. Reasons to consider separating the business activities to a separate corporation would include or might include control and revenue sharing decisions as between the music activities. In other words, you definitely can, let's think about not forget about your husband, but let's think about a third-party record label that has 10 different musicians. Well, the record label is one corporation, and it either has licenses or owns master recordings in the music of its artists, and its artists individually. Some of them are incorporated and some of them are not. But that one label is one company. It's actually sometimes more than corporation that has a variety of activities. With respect to the control and revenue sharing of each individual artist on the label, it's really what's relevant is what has been entered into. What's relevant is the contract that the label enters into with the artist. So, to answer the question without providing legal advice, generally speaking, a corporation can definitely have both the activities. It can provide the services of both you and your husband and others through one corporation without having to have a new corporation for each musical act that it represents.
Had to unmute. Question from Matt Foster. Can you please speak to specific financial thresholds and tax brackets as to when incorporating is a wise choice for a sole proprietor? To what degree should I be forecasting this decision so as to avoid being surprised and taxed heavily in a growth year for my business?
Okay, I guess I'll take this one.
Please.
It depends, because there's a lot of other factors that go into it. It's not just what tax bracket you are in. You know, you could be at the top tax bracket, but need every dollar personally to keep up with your home, health, kids, pets, personal travel, gym, you know, all this type of stuff. If you need all of the money after tax personally, then there is no tax deferral. There is no tax savings if you're just looking at a tax perspective. But I would say that if you are making profit, so income less all your expenses, and you're being taxed on about 40,000, I would say above that is when you want to look at, from a tax perspective, a corporate tax rate rather than your personal tax rate, because you're still in quite a low tax bracket at that point, and leaving it in the company doesn't give you as much of a benefit. To what degree should I forget? I mean, you should, as you're doing your bookkeeping and aware of where your profit is landing throughout the year. Don't save it for the end and get that surprise. Okay, I think we're back. Yes.
Technology.
I think that was good for Matt, though. Matt, let me know if that makes sense. Awesome.
Hi there, guys. Glad you're all still here. Our internet.
Are you okay?
Yeah, it looks like our internet kicked out here at the office and had a bit of a panic attack. Pleased that you're all still here and yik-yakking legal stuff. We got a question here from Dan. I've been someone running my ads through my Facebook business account. Recently, Facebook flagged the account randomly, and it's been a disaster for me trying to get my account back. The only thing it appears that will remedy this is if I can prove I'm an actual business. But since I'm a songwriter and not making much money, I never bothered to get a sole proprietorship, and now I feel forced into it. There might be some benefits, but I'm not sure if I should bother, as I won't be making a ton of money for at least a few years. Is it worth it just to get this business documentation and get the Facebook thing sorted out?
So you are a sole proprietor, you know, whether you like it or not. You know, you're carrying on business as your business name, whether your business name is your real name or a stage name. It's like, you know, as Chris said about a partnership, whether you like it or not, if you're working, you know, with someone else to make a profit, you're partners. And, you know, the Partnership Act of Ontario applies if you're here in Ontario. So, you know, you are a sole proprietor. The cost to get a business master license is, I think, $50 or $60. You know, the question is and it lasts for 5 years, go to Service Ontario. It's fairly straightforward to get that set up. It can be done immediately. You get the certificate on email, I'm pretty sure. Gina can correct me if I'm wrong. But, you know, if that's all that's needed to deal with the Facebook issue, then it's probably worth it. As I said earlier, people who are the word is wrong, people who are acting in business or people who are doing business like you're supposed to do that. You can't do things like, you know, well, either way, you're supposed to get a master business license. That's what we're all supposed to do. We're not the police here, but that's what you're supposed to do. But, you know, I think you bring up a good point in that there's a misconception generally about having a business that it has to be incorporated. And, you know, we talked about some of these things before, but essentially, if someone needs to if you have to prove that you're a business, then you don't have to incorporate. You can just either you know, say you're carrying on business as whatever name it is, and or get a master business license from Service Ontario, and then you get a nice little email certificate saying that, you know, you run that business with that name. So hopefully that's helpful.
Can I just add something in quickly? Dan, you would want to talk to your accountant, or if you're looking for an accountant, I'm taking clients on, and talk about HST. Because if you register for HST, you'll have a business number. So that is some way to show that you have a business that's operating. And my guess is should benefit you. But if you're looking for that conversation, I can have that with you. Just reach out.
Yeah, you don't have to be incorporated to get HST. And you know, and Sandra will talk about, you don't need to have a certain level around, you know, 30,000 to get HST. You can get HST without reaching a threshold of revenue. But you know, that's Sandra's area, not mine. But
Especially for the songwriters, when you earn royalties, there is no HST to collect on top of it. So if you're strictly a songwriter who has expenses here, you're in a refund position every year. So it's another topic, but it's a good one. So have it with someone.
talk to Sandra about that before you buy a lot of equipment.
Yeah. Yeah.
With that, you guys have answered all the questions and you are full of information. So from FMO, I'd like to thank all of you for joining us, and I'll leave it to Rosalind to say some final words.
Oh gosh. Well, thank you, Sandra. Thank you, Gina. Thanks, Chris. And thanks, Byron, for joining us. I feel like, yeah, we could have like 4 more of these and still not get to all the topics. This was really amazing. Thank you all for your expertise. And, you know, if people want to, there's a handout that Gina and Byron have prepared that goes over some of the topics that were talked about. So I think Joel will make that available. And in the coming days, there may be a video up on YouTube that you can check out, which, yeah, I'm sure will be shared by Joel as well. And yeah, on behalf of Folk Music Ontario and the Canadian Federation of Musicians, thank you everyone for joining us.
Thank you.